What's up, YouTube? Stocks by the Numbers. Welcome back. Today I wanted to do a quick update on STEM Inc., ticker symbol STEM, listed here on the New York Stock Exchange. Now, this is a company that we originally spoke about many months ago, and the stock, as you see here, went from about 380 and change up to about 780, yielding us well over 100% return just inside of a couple of months. Now, since then, it has been pulling back and selling off. It broke this trend line here that we were watching, and recently, just in the last couple of weeks, once it broke like that $5 mark and hit that 4.5, 4.30, 4.25 level, that's when a lot of people, especially in the Discord, I know mentioned to me that they started to get in. And now we had a big drop down, as you see, new lows there of about 3.5, lower than where it was when we initially found it before it had that massive rally. And I know a lot of people may have thought that it may be because of that June-July rally, which of course definitely added to it, and the whole tech craze and all that nonsense. But again, we have completely pulled back, and now today, as you see, $3.94, up 23 cents, 6.2% here on the day, and up another 0.5% after hours here. So let's see what's going on. So first of all, as you see, this was the bottom trend line here that I was watching, and if we go back, you can see that's going from December of 2020, and that's going across basically to those bottoms there. I mean, we could adjust, there you go, slightly, and or also at the same time, you could keep that also as a trend line where those candles closed right there, showing support. But basically, you can see that it broke slightly, kind of that flash crash through that trend line, hitting the new lows of 3.5. And honestly, I know it sucks, especially when you buy a stock and it goes down before it goes up. But remember, if you bought it knowing that you were going to be confident, knowing that it was worth more, then you should either A, hold on for a wild ride, knowing that it is going to be volatile with a $600 million market cap stock. But of course, more importantly, if you are able to average down and continue to piece your way in and add to the position, now you may have had a cost basis of around 4, and even though it broke down, now you can see your break even, no harm, no foul. So, kind of hard to tell sometimes. Obviously, I personally did not expect it to continue dropping down to 3.5 and make new 52-week lows. But again, that's why, we first found it. It was over there in the 370s and the 380s, and then we had the big run. So that's why when it started to pull back even into the mid to low 4s, I was saying, in my opinion, that it is a pretty decent entry, 430, 440, and then obviously when it continues to pull back, again, ideally you want to add to the position. But again, if you can't add to the position, just relax, because obviously it was worth $7 and potentially $8 just a couple of months ago, so all you need is another nice little rally here. So the problem is, for some reason, Piper Sandler, as it says here, lowers their price target from 5 to 4 and maintains a neutral rating. That kind of threw me for a loop, because overall, in my opinion, the company actually has been looking pretty good. Again, as we go back, I said it was mainly going to be about the revenue, and that's why after that earnings report we had that big 100+% return. And then even here, again, the stock went pretty high pretty quick. So that's why I talk about even if a stock comes out and actually beats earnings, it could have the potential to sell off and drop down instead of going up. So, sometimes these things have to come back down to earth. But as you see there, nice little beat on the revenue side by a touch over $1 million. Last quarter, August 3rd, and now we have next quarter coming up, November 2nd. So, in my opinion, it should really bounce off this level and get back above into the 4s. However, we could potentially, see, that was against the close of that candle there, basically like a little below that top of that candle there. And of course, it meets up right with that close on that candle there. But more importantly, you can see how this is kind of like a big descending wedge, even though we just kind of broke out of it. But chances are, in my opinion, it does have the potential to stay actually in this range. But overall, I feel it should be worth more. And even with this moving average coming down now, this 20-day, as you can see, it's like 472, 473. So that's why, it could have the rally and the breakout going into the next, I'd say 2 to 3 weeks, actually, before rallying and potentially running going into these earnings. So that's why Sorry. That's why, in my opinion, even though this moving average is coming down, I think it's only a matter of time before it meets up with it, probably, like around this 4.5 level, and that will potentially kind of solidify the breakout, especially if it closes above that moving average. That'll help solidify the breakout of the wedge and confirm the rally going into earnings November 2nd. And as you can see, we have a big jump in revenue estimates here, 180.386 million. So now that's what I've been saying, right? It's all about revenue. And since we looked at it again, you can very well say, well, it went up, but then it went back down. So we're kind of like flat from where we were. Okay, fine. However, in that time, you can see that the company beat earnings on the revenue side back-to-back quarters. And now, coming off a 90 million quarter, if this company, 180 plus million, if this company is able to meet and potentially beat this estimate, in my opinion, the stock is going to absolutely explode. And everyone's going to wish that they bought it down in the 3s and the 4s when the frickin' thing is, going to be chilling at like 7.5. So I think this is very conservative from Piper Sandler. I mean, we're expecting 180 million just in this quarter alone coming up, and we have a market cap of only a touch over 600 million now. So obviously that's just ridiculous. This is for period ending March. So Q1 67 million and Q2 93 million. So you're at 160 million. Plus this quarter now 180, so now you're talking 340 million, and that's what I mean. We go back to 22, and you can see for the year a little under 363 million. So, and again, this will just be Q3, and then obviously into November, December, January. Into January, it'll give us this period, the last quarter of 23. Which will close out the year. So I know that was a little confusing, but basically what I'm saying is if they come in at or above these expectations, then they're going to increase their revenue year over year, which of course is just going to make the stock that much more attractive. So in my opinion, I still like STEM. I liked it the first time we saw it. Again, we had a good entry. We had a good price, good timing. It ran up for us, and I'm assuming a lot of people made a lot of money. And now, nice car going by. And now a lot of people may have added to the position over time, especially since they reported earnings back in August. And I'm sure everyone's probably wondering, hey, I thought this stock was kind of rocking and rolling. Why are we dropping down now into the 5s, 4s, and now to new lows of 3.5? But of course, like I always say, what goes up must come down. And the markets overall have run into a lot of volatility, especially over the course of the last several weeks. So that's why I always talk about the companies that are quote-unquote exposed. And, again, the last couple of quarters, they weren't bringing in anything too extreme, even though it was on pace for beating expectations. But, long story short, again, I guess you could say it could have had the potential to sell off, so it did sell off. But the bounce that we're seeing here today, and even in the last couple of days, the way it was fighting and bouncing right around that trend line, that is, believe it or not, that is actually a very good sign. And in my opinion, again, last time we looked at the numbers, they didn't look distressing or anything. As you see again, what do we got? 5 of the last 7 quarters we've beat on the revenue side. Look at the big jumps now moving forward to close out 2023. Revenue expectations of 268.83 million. Insane. So for 23, that's why, again, last year about 363 million, and now for 23 in these next 2 quarters, the company is expecting to close out the year with revenue coming in basically equal to its market cap right now at 613 million. So that's why I'm saying this stock can easily double and triple from this level. And right here, we're, slightly below 4. So that's why, an easy double back up to 8, basically where it was. I think it was up to about 780. And that's why that'll bring us to a market cap of 1.2 billion. If they close out the year, bringing in 605.38 million, then the stock at $8 will be trading at only 2 times annual revenue. which of course means if it can get up to even 2.5 times, that would be $10, and 3 times would bring us to $12. And if we move forward to 2024, they're estimating over 825 million for the year. So now, again, if we go even 2 times this number, now you're talking about a $1.6 billion market cap. And obviously, we're talking about bigger and better things. That's why I'm sure people may be upset as of late if you did begin to buy in at 460, 440, 410, and now it chunked down to 3.5 and hit new lows, and you may look like a schmuck. But honestly, at the end of the day, like we always say, in the long run, it may not really affect you too much, and you're going to be more happy that you overall were in the right place, around the right time, not necessarily at the perfect price or the perfect time. But yeah, long story short, I do still like, sounds like someone almost died outside, but I do still like STEM overall. We have the debt increasing again. It's up to north of 500 million, but like I looked at last time, the assets are outweighing liabilities. And really with a situation like this, it looks like the revenue is continuing to grow. So this is something, in my opinion, that you would want to be a part of. You just want to try to pick your spots and not force your way in. So as it was running up in the 6s and the 7s, if you did happen to step in, obviously that may have been a little silly pricing and timing on your part. However, again, if you liked it up at 7 and change, you should love it down here at around $4. So this is why I say a situation like this, if you did happen to pull the trigger just a little bit early, but you are on the right track, don't be afraid to move around some other liquidity in your account and try to see if you can average down into a situation like this. So that's why I always say follow the money, follow the revenue, follow the numbers, and just try to add and scoop in at a discount, and more than likely it will work out well for you. And I know it may suck that you might have a lot of other dead positions that you might not want to liquidate to average down into a position like this. But again, that's why I always say follow the money. If we're pretty confident that this stock one day is going to be $10, $12, then don't cry over spilled milk, as they say. Just cut your losses, trim the fat anywhere you can, and try to move it into better situations that at least have the revenue to back it up, so that one day down the road it'll work out, it'll grow for you in value. But here on stock charts, we're looking at the daily. We can see RSI at 38 3/4, and of course the 50-day is swinging around here like a sine wave, and we're sitting here at 519 with the 200-day slowly pulling back. But again, in my opinion, I think it's going to meet up with that 20-day that we were looking at. Again, probably going to be like that 446 fib level, around that 4.5, if it potentially breaks out above that top trend line here. And it looks like the MACD is actually potentially about to cross. We had a big day today, so that's why we could have a nice little rally now, maybe back to like this mid-Bollinger Band of about 435. And again, if that'll get us above this trend line potentially, or at least right near it, and then that may add to the momentum. Again, that gets us above the 20-day moving average, which will just add to even more momentum. With the MACD crossing, that'll add to even more momentum. So that's why, it may have been an overreaction on the sell-off. However, the rally comeback now may be even more impressive. The MACD on the weekly looks relatively flat. Kind of looks like it's still kind of dropping down. But again, we had a very good day today to close out the week, even though we finished the week down 7%. But the RSI on the weekly is now down to about 34 1/3. And, of course, it could continue to drop and get back to that 30 benchmark. But as you see, the last time it did, that's the last time we had our big rally. So, again, nothing is set in stone. However, overall, in my opinion, I do like STEM. I do like the growth in revenue. And, again, even a situation like this, if the stock would hypothetically remain stagnant for like the next 6 to 12 months, when you're expecting bigger and better things, don't view that as a negative. View that as a massive opportunity, because if this company really continues to grow its business as analysts are expecting, and they come out now and they're going to start beating these expectations, Again, it's only going to be a matter of time. So that's why when you don't immediately get these massive explosions, you should actually look at that as a massive opportunity. That is your buying opportunity. Your goal should be, with all excess funds, to accumulate shares and build a position for yourself in your portfolio and wait for that explosion and that growth over time. And then you can look back and say, yeah, I remember every week, every month that I had a couple extra funds, I was just adding in and grabbing every single share I could underneath the sun because I knew one day it was going to pay off. So, again, anything can happen. But in my opinion, I think it looks good. And I think we might start moving up instead of down on STEM here. And I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up, algorithm, share the video, helps me get more eyes on the channel. Subscribe to the channel. That is our handshake agreement. I'll do updates on STEM. If I have something in the short term, a little scalp trade, I'll call it out in the Discord for you guys. Discord link in the description of every video. And again, I'll do all that for you guys. All I ask, do me a favor, push the subscribe button. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and they're volatile and they are very uncertain. So I want to wish all of you success. Hope everyone made a couple of dollars this week. Stay positive, stay focused, stay confident. Thanks for stopping by, and I'll catch you in the next one.